do we have the supply to actually meet that demand? And I would suggest that's the biggest risk for the nickel market, is that we maybe don't have enough supply to meet that demand, which means the nickel price could run too high too quickly, which I think could be great for investors who have exposure to nickel.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
Welcome, and you are watching and hopefully listening to the Financial Survival Network. I'm Kerry Lutz. Well, look, if you believe in the energy transformation that's taking place across the globe, then you know that nickel is one of the keys to this revolution, and carbon neutral clean nickel is a linchpin. But you know what? It's exceedingly scarce. And unless you know where to find it, you're just not going to have it. However, President and CEO Martin Turenne of FPX Nickel knows exactly where to find it and is sitting on potentially millions of tons. And right now, FPX ambitious exploration and drill program in 2 target zones in British Columbia. Right now, in case you're not aware, spot nickel currently going for around $8.42 or so cents per pound. Martin, it's great to have you back on the show. We talk about nickel. Most people here in the States and elsewhere, they think their knowledge of nickel amounts to 5 cents. Our nickel 5-cent piece, which is mostly copper, but nobody pays any attention to that. The nickel market, where is it looking at now? I know from 2009 to last year, we doubled production and we pretty much doubled consumption. Can that rate continue with the current mines that are on stream?
Well, the consumption side certainly will continue along that track. I mean, from 2009 to today, the consumption of nickel for electric vehicles was pretty minuscule. Tesla only started to exist as a company just a few years ago. Going forward, if you believe that there are going to be more electric vehicles on the road, certainly the demand for nickel will continue to expand. The main 2 uses of nickel, of course, are for electric vehicle batteries and for stainless steel. And so as the developing world continues to advance their economies, they increase their consumption of stainless steel. And we know what the market for EVs is looking like in the future, and that's pretty much straight up. The question, as you raise, is do we have the supply to actually meet that demand? And I would suggest that's the biggest risk for the nickel market, is that we maybe don't have enough supply to meet that demand, which means the nickel price could run too high too quickly, which I think could be great for investors who have exposure to nickel. But in a strange way, that's actually the biggest risk to the nickel market, is the price getting too high too quickly.
Pre-call, we were talking about nickel's relationship to copper, because there's pretty much been a direct correlation between the 2 metals for good reason, because they're often used together and in infrastructure, et cetera. And your belief now is that nickel prices are kind of out of whack with copper.
That's right. So if you look back at the last 40 years of the nickel price and the copper price, the nickel has tended to trade at around 2.5 times the copper price. So, if the copper price was, let's say, $3 a pound, the nickel price would typically be something in the range of $7 to $8 a pound. The situation right now is that copper is trading well over $4 a pound, and nickel is only trading at about eight and change. So that ratio is a little bit out of whack. Nickel is undervalued to copper vis-a-vis that historical ratio. That's because the nickel market had a period of serious oversupply several years ago, which led to a buildup of inventories. And so there's higher inventories of nickel right now than there are of copper relative to the markets for both of those metals. However, the nickel inventories have been rapidly declining in the recent months. And because the EV impact, the impact of EV battery demand will be relatively much larger or more impactful on nickel than it is on copper because the nickel market is a smaller market. We expect nickel to start to play catch up to copper here in the months and years to come, and to really reassert that historical ratio of that sort of 2.5 times to 3 times the copper price, which would suggest, a lot of run ahead of us here potentially for the nickel price.
Right. And nickel is trading nowhere near its high. It's trading 1/3 of its prior high back in 2011. Copper is at or near its all-time high. So there's a real imbalance between these two metals. Do you think maybe the relationship is changing, and at some point that factor will change, the ratio of the two?
I think that we've already been through that kind of step change. What happened in the nickel market is you had the Chinese develop a new method of producing nickel in the form of something called nickel pig iron. That started to happen about 15 years ago. And that is now the dominant form of nickel production globally. So you had a disruption to nickel supply that's somewhat analogous to the shale disruption within the oil and gas business. And the nickel market has now absorbed that disruption, that massive new source of supply in that new form that the Chinese developed. We've now absorbed that as a market from a consumption standpoint. We don't see any kind of new supply disruptions or new, novel ways of producing nickel going forward. And so having digested that huge supply disruption, I think we can revert back to those historical norms in the nickel price. And as you say, over the last 15 years, nickel is traded as low as $4 a pound, as high as $24 a pound, and we're only trading at about $8 today.
Yeah, we're not even at the midpoint. So let's talk about FPX, the Deckard Nickel District, which is really exciting. I find it exciting. The fact that you're sitting on the 3rd largest nickel deposit at Baptiste, you're just getting underway drilling the Van area. And what are you seeing there?
Yeah, so at our Deckard Nickel District, which we control 100% of, it's located in central British Columbia, Canada. It really is a district scale land package. It covers almost 250 square kilometers. Within that, as you've mentioned, we have the Baptiste deposit, which is the world's 3rd largest undeveloped nickel deposit. It contains about 7 billion pounds of nickel. And, the nickel price today is about $8 a pound. So people can do their own calculations on the in situ metal value that we've already, defined at Baptiste. 6 kilometers north of that deposit, we've identified what we call the Van target on the basis of outcropping bedrock. So this is where the nickel is sticking up out of the surface in bedrock, right at surface. And the Van target actually covers a footprint of outcrop that is larger than Baptiste. It's around 3 square kilometers of fairly continuous outcropping material. And the grades at surface are higher than they are at Baptiste, but the Van target has never been drilled until now. So we have just commenced a drill program, the first in the project's history at the Van target. And we see the potential here as hopefully as the results come in, and hopefully they come in the way that we hope, that we could have another major world-class nickel discovery here at Van, with a potential that could be larger and or higher grade than Baptiste, which, as we've said, is already a massive deposit.
And the stock price shows absolutely no value for Van, right?
I would argue yes. I mean, a common way to think about project value, market cap value, is to look at the ratio of a company's market capitalization to its project value as published in the economic study. So we published an economic study on our Baptiste deposit last year, which showed that we have the project has a value of about 1.7 billion US. Our current market cap is below 100 million US. So we're trading at a multiple of about 0.05 or so to our underlying project value. Whereas the peer group of base metal companies typically trades at around a 0.15 to 0.2. So we're about a third to a quarter lower on the valuation. So we still think of this as a deep value opportunity for investors to look at on the basis of Baptiste alone. And that, as you said, ascribes no value to the exploration potential at Van, which, as I just noted, could end up being a larger and or higher grade deposit to complement what we've already shown at Baptiste. So we think that there's a huge sort of value opportunity for people to look at the stock here.
Last time we made mention of this, but probably should talk about it, go a little more in depth. Low carbon nickel. There's a desire by Elon Musk and others that the nickel that's going to go into their batteries has to come from carbon neutral sources. And I'm not quite sure, Martin, and maybe you can elucidate me on this. I don't know where that carbon-free nickel's coming from. Obviously, you have it, but there aren't many other sources of it in the world, are there?
No, really. In fact, there are none. The mining industry, as I think we all know, is by its very nature a carbon-intensive business. You burn a lot of carbon to dig up ore and to process and recover minerals through metallurgical recovery. And the nickel industry in particular is particularly carbon intensive in that way, because a lot of nickel production facilities are powered by coal-fired power plants in Asia. This is obviously very dirty, highly carbon emitting power. Our project here in BC will be based on the hydroelectric power grid, which is extensive here in British Columbia, which is a very, very low carbon source of power. In fact, almost zero carbon source of power. So the ability that we see is to produce nickel with a carbon footprint of around 2 tons of carbon dioxide for every ton of nickel produced. And to put that in perspective, the industry average is about 30 tons of CO2 for every ton of nickel produced. So at 2 tons of CO2 here from our project, we're 1/15 of the carbon footprint of average nickel production globally. Why does that matter? It matters because, regulators are pushing EV battery manufacturers to produce their products with as low carbon footprint as possible, because the whole purpose of the regulatory push to encourage people to buy EVs is to reduce carbon emissions. So if you're putting a bunch of dirty nickel or dirty cobalt or dirty copper into these EV batteries, it kind of defeats the purpose of the regulatory push to make these cars, quote unquote, zero emission vehicles.
And we've seen a lot of articles about that very topic. You're saving all this carbon on the electric vehicle on its operation, but to get it into the showroom, you're blowing all this carbon dioxide into the air. So it really is a barrier, and you can't just address the end product. You got to go address the components, what goes into making that end product. And finally, we got a qualitative issue with nickel, and that is the standards of nickel that go into an EV battery, into these lithium-ion batteries. It's not just your run-of-the-mill nickel. You've got to attain a certain qualitative measure for it to even be considered to be included, right?
Yeah, there's exceedingly high purity requirements on the nickel that goes into an EV battery. You're talking about 99.9999% purity requirements. You really can't have any deleterious elements in there, or else the nickel in the battery just won't perform, and you can have some serious issues with performance, etc. And so that means that certain nickel producers are challenged to produce nickel to that degree of purity. The question has often been asked to us: is FPX capable of producing nickel in that high purity state? We believe that the test data to date has shown that we're well on our path to being able to do that. And we'll continue to do test work on that this year. And later this year, we hope to be able to definitively answer that to the affirmative, that yes, here is the sample production of nickel sulfate, which is the battery chemical I mentioned there, that goes into the batteries, that was produced from our ore. And we hope to have news on that to the market to definitively show that, yes, we have what it takes to produce nickel with that very high purity requirement.
But your gut tells you that it's going to work out.
Oh, it's not just my gut. It's a lot of test work we've done to date that points quite clearly towards that fact. There's one additional stage of testing that we have to do to fully, comprehensively demonstrate that. But while we don't think that's a formality as such, all of the chemical properties of our feedstock suggest that should not be an issue for us to be able to achieve that.
Basically, if I could summarize, the quality is there, the quantity is there. It's a low carbon nickel, everything that's necessary for the electrification transformation, for lack of a better term. It's kind of awkward term for it, but that's exactly what we're talking about here. And pretty much the drilling at Van has the potential to really be a game changer for the company and really thrust you into the market's eye and hopefully get you the valuation that clearly the company deserves.
Yeah, and we would add on top of that a couple things. The high level of management ownership. So management and board owns almost 20% of the company's stock. So we're highly aligned with shareholders. And I think that's very important for, speculators to look at. Is management aligned or not? And we definitively are in our case here with FPX. The other piece is that we've got almost $20 million in the bank. We're fully funded for the next 2 to 2.5 years of activities. So we don't have any funding requirements in the short term. And, we raised money earlier this year in April. We raised about $16 million. We did it at 65 cents Canadian, and the stock is currently trading at about 52 cents Canadian. So at a pretty deep discount to what the recent offering was. And again, we think that speaks to sort of the value opportunity for people to look at the stock here.
Hey, and not to mention one other thing, Martin, that goes in the company's favor, and that is your background as a CPA. And you've been counting the paper clips throughout your involvement with the company. I can safely attest that from looking at the financials, there's no yachts there on the company's balance sheet.
Yeah, you can see my luxurious home office here, and the artwork on the wall behind me here attests to the fact that we do keep things pretty lean, and that's just a core value of the company. This is the shareholders' money; it's not our money. We treat it we treat it with the utmost care, and especially as we are shareholders. The outcome that we're looking for, a successful exit by eventual sale of the company to a major, is what we're driving towards. And every decision we make day to day, month to month, year to year is focused towards that objective.
Yeah. And if I could just interject, there's a certain inevitability to that eventual exit plan here. All the factors, all the pieces are in place for that eventual outcome. So you really need to go over, take a look at fpxnickel.com. That's nickel, Nickel. I tend to misspell it, Nickle. And the tickers in Canada, looking at FPX. In the US, FPOCF. Make sure you go to the site, though, sign up for notifications so you can get the latest on the Van drilling as it becomes available. And if you've got any questions for Martin, just shoot me an email, kl@kerrylutz.com. Martin will answer all. I promise you that. Martin, a pleasure. And I'm looking forward to seeing those Van results. And we'll talk to you again at that time.
Excellent. Thanks, Kerry.
The Financial Survival Network.